Hello and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah, and the big news is China. Yes, and I'll get to that. But first, what happened in the world markets important, and there's lots of data, so I'll rush through some. First, the U.S. markets they had a decent day, so about a percent or thereabouts, in line with what the futures market in the U.S. was suggesting when Indian market shut shop yesterday. So about a percent higher for the Dow, close to a percent or thereabouts. Similarly for the other indices, so that's doing okay. There's this gauge, which is a fear gauge of sorts, which traditionally in the past has indicated some bit of hinted at possible weakness for the Nasdaq, and that gauge is now right at the levels from where the warning signs are emanating again. And we've seen that in the past couple of days that the Nasdaq has not quite outperformed the Dow. This is the volatility gauge, which is the highest versus the VIX since 2004. Typically, at these times, it has indicated at least hints of volatility, if not a sharp correction. So be mindful of that if you're indeed invested in a Nasdaq fund or invested in some of the uh, you know Nasdaq companies as well. The whole gamut of tech companies that are available in the US, because a lot of Indians do that. Just be mindful of that. Really, cloud companies, SaaS companies, for example. But the big news today, of course, has been Asia has just come out, and we've had a tough time just pulling out a chart, but just bringing it out. The Chinese GDP number is out, and China is saying that its GDP grew 3.2% in the second quarter. It, of course, remains the weakest expansion on record. But you have to be mindful of the fact that at a point of time when country after country is talking about degrowth and how the lockdown quarter would be the worst in history, China has shown this number. And I think it will be the talk of town today for sure. For sure. I'll just leave it at that. I won't talk too much about it, really. The Asian screen is, well, at least ahead of the GDP data, was in the red. I think there would have been some volatility in the Chinese markets for sure. So HSI might be impacted, KOSPI maybe marginally at that. So some of those indices could be volatile, but I reckon that there's a bit of a downward bias in the session. I also wonder if people would believe that this would mean that more money would flow into the Chinese stock market simply because the money is unemotional, right? As Mark Matthews said as well, it doesn't see whether the market is growing in a China or something. Wherever there is growth, money might chase it. So I wonder if China's gain could be other countries' pain as well. The SGX Nifty 2 indicating a start which is about marginally lower, but lower for sure. So after the bit of a pullback that we had yesterday while the world was doing okay, let's see if we get hit more, or do we stay stable for now, just about 0.15, 0.16%. So no dramatic cues in the SGX Nifty for our markets. Frankly, and I don't have too much to say today about what the trade setup or what the market could do. It could well be a day of consolidation, to be honest. And be stock specific is the humble thing, right? I think that one line to my mind about the kind of subscription that the Rosari Biotech IPO showed uh, seems to suggest that there is if there is quality, then it is finding takers, because 80 times for a specialty chemical company which is coming at 24 times earnings is no mean feat. It is a very, very, very decent subscription number that the IPO has shown. So all of you subscribe to the IPO might also get some listing gains, but that notwithstanding, all I'm trying to say is that bottom-up stock picking will reward, and that's what we'll try and to focus on today. There are a few stocks that you should monitor, and let me get to them early today. So firstly, the stock of the day to my mind would be Infosys. Frankly, a no-brainer. It was easy to pick, really, but still, I am labeling this as a stock of the day for more reasons than one. First, the results are of course above estimates. The margin beat led to PAT number being 8% higher than estimates. 8% beat on that base for a profit after tax number from Infosys tells you something about what they did. The other important thing is the guidance. Now, you may look at the number and think, oh, what's the big deal? Because the constant currency revenue growth guidance for FY21 is 0 to 2%. The operating margin at 21 to 23%. But here's the deal. Infosys is saying that sales growth may end in the positive. TCS has forecast for a decline. That's the big story. For a lot of brokerages that I read in the morning, Infosys is now amongst the top 2 or the top pick in the IT space. Macquarie's come out with a note, very positive. Axis Capital. I think almost all the notes that I read had hints of positivity. And frankly, the ADR was a bit of a giveaway, right? Infosys stock had rallied yesterday. So keep that in mind. But the ADR did even better. And that's a bit of an indication that the Infosys stock today too could do very well. So to my mind, the stock of the day will be Infosys in the session. And that leads me to believe that some of the other IT names could do well. By the way, remember L&T Tech too had a reasonably good outing. So maybe that stock too, L&T Infotech, I mean, could also do very well in the IT space. Then I would watch out for Deepak Nitrite. Now, let's spend a little bit of time here. Reliance has expressed interest in pouring into phenol manufacturing. Keep in mind, Deepak Nitrite is the only manufacturer of phenol in India currently. And therefore, there are a couple of brokerages, including BNK, which have come and said that now that Deepak Nitrite might have competition, and that too from Reliance, it could be a big thing. I think there are a couple of points to ponder out here. One, and this is my take, of course, that Reliance will take about 2 to 3 years to build this capacity. It's not going to be built in a hurry. Two, Reliance may use phenol for its own self-consumption and not necessarily for selling outside. Nobody knows the game plan as yet, but Reliance has a lot of requirement of phenol for the upcoming products that it is going to manufacture. And therefore, the scare might be unfounded. Three, Deepak Nitrite itself might convert a lot of its phenol manufacturing into downstream products for itself. And therefore, 3 years is a long time. So I know brokerages are in a bit of a rush, and rightly so. They have to warn people about what's happening. And therefore, maybe there is a knee-jerk reaction on Deepak Nitrite today. I would reckon there's still some time. The reason I brought this up and I'm spending some time here is because for all of you who didn't know, if indeed Deepak Nitrite corrects today, it would be on account of this. A Power Grid and GAIL, interesting names because provisional demand notices towards license fee by DOT has been withdrawn. Let's see if there is some reaction thereof. I don't think the market believed that they'll pay, but nevertheless, I just brought it out because it's happened. And the Bloomberg Daybook today suggests that PTI has mentioned a copy about how the MSP for sugar would be raised by 200 rupees per quintal. That's a 2 rupees per kg increase in the minimum selling price of sugar. I would reckon all stocks, Balrampur, Dhampur, Renuka, across the board, could actually see a big spike today. So do watch out for these stocks as well. I think these could well turn out to be interesting day movers. Watch out for Indiabulls Real Estate as well. There's some proposal from the Embassy Group for merger of assets. So and watch out for Vodafone Idea and Bharti. So those are the names you have to watch out for. Last but not the least, what stood out for me, and I just want to clear the narrative here. One, India has turned the next exporter for the first time in the last decade because there's a trade surplus of $0.79 billion in June versus a deficit of $15 billion in June 2019. I know people would say that, oh, this is great for India, etc. But this reflects weakness in demand in India versus lack of weak demand abroad. So therefore, Indian exporters were able to export. But Indian importers didn't, because of the lockdown reasons and weak demand inside, did not find enough reason to import so many goods. And that's the point. It's actually a worrying sign. Yes, the headline is great, but it's actually not a good sign to my mind. But let's see, it's a flat day today. So stay bottoms up, focus on individual names, and have a profitable trading day ahead. Thanks so much for tuning in.